Hello, with me today I have Matt Superior, real estate analyst at Peel Hunt. Hi Matt.
Hello Lee.
Thanks for joining me today. It's not been plain sailing for the UK property sector in recent years. I mean, 2022 was particularly bad. As a bit of background, could you please explain to viewers what's happened with the sector in recent years?
Yeah, it's been a bit of a roller coaster ride. So 2022, I think share prices fell on average by a third. If you roll that forward to the nadir in October last year, from the start of 22, they'd fallen by nearly 45%. Thankfully, since then, we've enjoyed a bit of a recovery. So I think we're up about 20% since October, but it's certainly been quite a painful ride for many investors.
Post-pandemic, has the attraction of investing in offices diminished?
Offices is still quite an emotive subject. So I think, obviously we went through an experiment during the pandemic of flexible working from home. And I think the pendulum swung one way and it started now to swing back the other. And I'm sure your viewers will have read in the newspapers recently of a number of businesses encouraging their staff to come back to the office more often. But there is definitely still some ambiguity out there about the future demand for offices. But interestingly, what we have seen, and it's very encouraging for the listed sector in particular, is an undoubted flight to quality. So the demand for best-in-class offices has been very robust. Rental levels have continued to go up, and here in the city, rents have surpassed £100 a square foot on a number of new schemes, even higher in the West End, of course. So while there's really strong demand for the best-in-class offices, the jury is still out perhaps on some of the lesser quality office space in not just London, but other regional cities around the UK and beyond.
Right. I mean, you touched on my next question, which was sort of where are we now? So, the listed property sector took part in the broader market recovery that began about a year ago. But what do you think is in store now? Is there another leg to this recovery?
Yeah, you're absolutely right. So as I said, share prices up from their October lows of about 20%. We've got a number of sort of measures of value in the sector. Where we sit versus our net asset value, probably the most prevalent one. Most investors will understand that. Today we're at about a 10% discount across the sector on average. And obviously there is a wide variance amongst the constituents on that measure of value. I'm optimistic still. I think that there is still a good opportunity to buy good quality real estate at a discount at a right point in the real estate cycle.
Okay, and of course we've got a new government. So what impact has Labour's election victory in July had or is likely to have on the sector?
Well, I think, when you're talking about, a capital intensive sector like real estate, particularly a global one, and the UK and London in particular is definitely a global market. So, the money is not just domestic, it comes from all four corners of the world. I think the word is stability. So I'm hopeful with a more stable government, with a mandate to govern, that should be a good backdrop for capital flows into our real estate industry. More recently, we've had some legislation or proposed legislation around the residential market, which should be, again, conducive to institutional investment in that asset class. I guess more generally, a lot will depend on how the budget looks like at the end of next month to see what the forward-looking environment is for real estate investment. But after effectively a 2-year buyer's strike in the real estate market here in the UK, personally I'm hopeful that we are starting to see the signs of a recovery in investment volumes, more price discovery, and I think that sort of feeds into the sort of recovery theme that we're thinking that the real estate market shows over at least the next 12 or 18 months.
Okay, and perhaps to give viewers a better understanding of how things work within the in the sector, could you please explain the correlation between bond yields and real estate valuations?
Yeah, it's been an incredible correlation over the last 2 years. I've been doing this for 20 plus years and I've never experienced a correlation between risk-free rates and property yields and the performance of equity shares like we have seen over that time period. So, real estate, the value of a real estate asset is really just an amalgamation of its future cash flows, a bit like a bond. So when the price you can get on a bond reflects a higher rate of return, real estate has to reflect a higher rate of return as well. So real estate values have adapted accordingly. According to the sort of the UK benchmark, values probably fell 25%, something like that, from their peak, all because we've seen risk-free rates move from nearly zero up to something closer to 3.5% as they are today.
So, I mean, real estate investment trusts or REITs like British Land, Land Securities, Tritax, Big Box and Segra have done reasonably well, but they're still nowhere near their peak. So what does the future hold, and is the sector still a good investment?
Yeah, so I think, as I said before, the sector overall, 10% discount to NAV today. Again, some of those companies you mentioned trade on much worse ratings than that. Some of them trade on much better ratings. A lot depends probably on the underlying asset class that you're exposed to. Some of it will depend on the track record as well. But when I look at what I expect to happen going forwards, on a 2-year view at the sector level, I'm looking at accounting returns, so the dividends that you receive plus the growth in your underlying net asset value of something like 10% per annum, which is a good return in a historic context. And when you then think that you can buy that kind of return profile at a discount, I'm an optimist. I think there is still good value to be had in a good number of names in our sector.
Okay, so could you run through some of the global thematic trends that are currently having a big impact on investment demand?
Yeah, I mean, AI technology is definitely having an impact, and it's playing out in the real estate market through data centres. We have limited exposure to data centres explicitly in the UK, but SEGRO has probably just short of 10% of its portfolio in data centres or in the potential for data centres. But we've seen another number of other companies successfully sell plots of land to some of the data centre operators, some of the technology companies to build, in some cases, hyperscale data centres here in the UK. So there's definitely a theme that is playing out. I think another theme that has been around for a number of years now, but is still at the forefront of investors' mind, is what I'd call the living sector. So that is, clearly we've got a housing shortage, we've got a nascent institutional market for housing to rent. I think investors are still very keen to increase their exposure to that market, and as a derivative of that, the student accommodation market as well. So we've got 2 quoted companies in that part of the market. I'd argue probably sector leaders within their chosen niches, and again, that's a part of the market where people are seeing long-term demand-supply imbalances that are favourable to landlords.
Okay, well, AI is interesting. If you're a property owner or a developer, is that more lucrative? Is selling sort of assets on that basis to the AI sector, is that more lucrative than perhaps other means?
I think at the moment, absolutely. I mean, there is somewhat of a gold rush. I'm not an expert on this, but it feels like there's a gold rush for the right sites. And, sites for data centres, you have to hit a number of, I think, very specific criteria. Power being an important one. Bandwidth as well, so how well plugged in you are to the internet. Location as well, whether you're close or otherwise to population centres as well, depending on the type of use of the data centre. But for land that ticks a lot, if not all, of these boxes, the value of that land in the hands of a data centre operator is going to be significantly higher than it would be for any alternative use, for sure.
And which of the areas of the property sector offer the best growth opportunities, do you think, over the next 5 to 10 years?
Yeah, so I think I've touched upon student accommodation already. I still think on a 5 to 10 year view that if you've got the right assets in the right locations, and importantly aligned to the right universities or higher education establishments, you should do very well. And again, the incumbents in the quoted sector have very nimbly aligned their portfolios to those winning locations and institutions. So I feel very comfortable with that one. I think the second one is self-storage as well, which is still a fairly young industry here in the UK. more established in other markets, the US and Australia being the obvious two. But high barriers to entry, a lot of value in brand and platform, giving the incumbents the opportunity to grow their portfolios and grow them accretively. So I still think on a 5 to 10 year view, there's some really exciting returns to be had in those two subsectors of the real estate market.
Okay, Matt Superior, real estate analyst at Peel Hunt. Thanks very much for joining me today.
Pleasure.